You probably have heard the news that the housing market has been slowing, that the number of resale homes has been dropping, prices are dropping a little bit here in the Los Angeles, South Bay, and Beach cities, but there is an exception. Where is the housing market still kind of steaming along, doing just fine? And that is new construction. And the reason new construction is still going along and not really suffering a setback here in Southern California is the new home builders seem to have a secret marketing method to capture attention, and that is by offering their buyers a lower interest rate than is available to the general public when the public is looking for a mortgage loan. And that has really kept their business moving along and keeping their homes selling successfully and selling at top dollar. So, Sasha, what exactly are they doing that enables them to offer these kind of secret lower interest rates?
Well, you're right, Steve. It seems unbelievable sometimes when you see new home builders advertising rates of about 4% for some first-time home buyers for their new builds. What they're doing is a form of a 3-2-1 rate buy down in a lot of the cases. So what does that mean? Basically, it's giving you, for the next 3 years, a break on your interest rate. So, for example, let's say the rates today are 7% average. With a 3-2-1 buy down, now this has to be paid for by the seller. It's not something that a buyer can add to closing costs or buy down points. A 3-2-1 buy down has to be paid for by the seller, or in this case, the builder. And it allows you for the next 3 years to get an interest rate that's about 3% below current interest rates. So this year, for example, if you were to buy a house, you would pay 4%. Next year, your interest rate would automatically increase by 1% and go to 5% for a year. Then the year after that, it would go to 6% for a year, and then 7% for that final fourth year and forevermore in the loan.
Okay. All right. So basically the buyer's getting a great deal and the new home builder is essentially paying the cost of this program. So is there an option? Is this program available to resale homeowners who are putting their homes on the market? Because I'm thinking that if I'm going to be marketing a home for sale, marketing one of my listings, this is something that I'm probably going to be doing is borrowing from the new home builder playbook because I know it works, and offering a similar program to home buyers and focusing them on the fact that, hey, you can buy this home in Manhattan Beach or Redondo Beach on a first year interest rate as low as 4%. And that's certainly going to get a lot of attention, a lot of traction.
So to answer your question, Steve, yes, we can use this marketing technique for a resale home. And the way you do that is, as a seller, you need to be willing to contribute a partial amount or a portion of your proceeds towards the buyer's closing costs. This is a feature that needs to be seller financed. It cannot be buyer financed. A great scenario for this is, for example, if I have a house that's been sitting on the market for more than 45 to 60 days, I would absolutely be calling my realtor and looking at this as a marketing strategy, because absolutely buyers are going to want the opportunity to secure a mortgage at 4% interest rate when they can get 7% everywhere else in the marketplace. So again, a great tool, a great marketing tool for sellers to get their houses sold in this marketplace.
So yeah, definitely if your home has been sitting for a while, it sounds like that could drum up quite a bit of interest. But I would say rather than be in a position where your home hasn't sold, it's been sitting there, this really should be one of our core marketing features from the get-go. And
yes, absolutely, Steve. I think it's definitely a wasted opportunity just to get people through the door, again, it's all about traffic. Even if that one person that comes through the open house doesn't like the home, maybe they'll talk to somebody else that they know that does.
Right, right, exactly. So the tactic that I generally use when I'm sitting down with a home seller and we're going through the market and the value and the expected price is we would look at the cost, and I'm going to throw something up here on the screen for everyone to look at so we can see how the monthly payments are different with the rate buy down versus not having a rate buy down. Also have the cost on there. So what we would typically do with my listings is we look at, okay, what is our target selling price? What is the market most likely going to be willing to purchase this house at? And of course, what are the net proceeds that the seller is trying to accomplish? What do they want to get from the home in terms of their profit and their proceeds? And we look at the cost of the buy down and we make an adjustment to the asking price. So the asking price may be elevated to accommodate that cost of the buy down, because then that cost gets rebated back to the buyer. It leaves the seller with essentially the same net proceeds that they were expecting. So there's
exactly.
Really
Now, I would say one caveat with that is you also have to make sure that the house will appraise for that value, that extra value. Now, thankfully, we're in Southern California and our market is very robust in terms of value. So it's usually not a problem, but it's definitely something to consider.
Right. Yeah. So, and I've not really seen that happen before, especially when we're dealing with homes that are about $1 million, $1.5 million, $2 million, adding another, $50,000 in the asking price. We haven't really seen anything come back where that triggered a problem with the appraisal, especially with the market has been, especially in the South Bay and the Beach Cities, the market has remained very strong.
Yes.
So, yeah, but that is something for sellers to be aware of, is there's always the risk that the appraisal could come back and eat into that. But we have ways to deal with that. And one of the things that we look at with buyers when we're offering these incentives is, in order to get the incentive, they must make a full price offer. If the asking price is $1 million and includes $50,000 to go towards the buy down, no, they can't offer $950,000 or $925,000 and still get the incentive for the rate buy down. It's got to be a full price offer. So that alleviates some of the concerns that sellers may have, where they may be thinking, okay, well, I've budgeted for this based on $1 million asking price, and now the buyer is only offering $925,000, and then I still have to pay? No. So we package it so it's very clear that it's a full price offer or no deal.
Exactly.
Yeah. And which is no different than the new home builders. The new home builders are saying, hey, we're essentially discounting the home to you in the form of this interest rate buy down offer, which can be quite significant.
Exactly. And like you said, Steve, fortunately, at this price point, most of the time these deals we can make them work. And again, being able to turn around to your buyers and not have so much of the back and forth negotiations. It's just a very simple, if you want it, here it is, and it's available, come and take it, first come, first serve. And again, I think it simplifies the process for both parties in the negotiation. And again, I think that most of the time when we see sellers offering this type of option to their buyers, their houses are definitely the first to go.
Yeah. Okay. So if you are looking to sell your home here in the Los Angeles, South Bay, and the Beach Cities, and you're talking to real estate agents and you're not hearing this as part of the marketing plan, then that's probably a red flag, because if you want your home to be out there on the market and sell quickly for full asking, top dollar, and not linger on the market, this needs to be part of the core of the marketing approach that's being taken with your listing. So if you have questions about how this can potentially work for your home, and you want an evaluation of, what is this going to cost and how is this going to work and how do we implement it in the listing, then definitely contact information for myself is here, and also Sasha, who would be stepping in to help with financing for the buyers. Her contact information is popping up right there also. And if you have any questions about the rate buy down program, how it works, then please also you can comment below. We love to have a conversation and dialogue going on here on the channel. So hope you found this information useful and helpful, and thank you for watching. We will see you on the next video.
Thanks, everybody.